Hello and welcome to another update video about FET. FETCH.AI chart is unchanged. The market is still moving sideways. I think there are two main potentials. First of all, for me, I'm looking at higher prices against the $1.27 level because that is the key support level. Okay, so we've got two scenarios on the chart. Both are at the moment bullish, but I will have to change my opinion below $1.27. Current price action suggests to me that we should get one more high. And I'm looking at the area of $4.70 to $6.30 as next target range as per previous videos. In one scenario, the low is already in, but this scenario needs proving. How could it prove it? Well, first indication that the yellow count is likely starting as an ending diagonal in wave 5. As you can see here, we already completed 1, 2. But we can't really confirm this until there is a break above that last high there. So if we get a break above $2.54, that would indicate that we are heading to the upside as per the yellow microstructure as an ending diagonal here of circle wave 5 into that area that I mentioned between 470 and 630. There is some Fibonacci confluence there from other levels as well. As you can see here, it's actually on the right, around 630. So to keep this yellow count alive, which is the short-term bullish scenario, the last swing low needs to hold, which is the 1st of May low. You can see that when we zoom in, it's here, this swing low. That needs to hold at $1.86. And against that level, the focus can be on higher. And we could say that possibly the move that happens here at the moment is an A, B. It's basically just waiting for that C wave rally in wave 3. That should then take us next to the next upside resistance level around $3.30, and then we should get another 4.5 to get into that communicated upside target region. It is possible that in the white count we get one more low. In this scenario, I'm observing a WXY correction. This is a complex correction and can lead to one more low in wave Y. In this scenario, we have an A, B already completed, or actually the B wave is currently navigating, or we're navigating the late stages of this B wave. The B wave is seen as an Elliott wave triangle, and we could see one more low in wave C of Y of 4. And this C wave, basically, it would indicate one more low in the correction. I really don't want to see more than one more low. If we see more than one more low, something isn't really right here. And that one more low should send the price down to the region between $1.57 and $1.27. That, however, in turn, needs some confirmation. We're just ranging, okay? So nothing changed really structurally. It takes a break below that $1.87, $1.86 level to suggest that we're heading down to the next fib there. And obviously invalidation for that white count here is a break above that last high that I mentioned at 254. So these are really the key levels. 254, upside breakout, downside breakout, $1.86. And the next targets are also communicated to the downside 157 to 127. But that would not necessarily be bearish. It would indicate that this is just simply the next fib support in an overall bullish scenario. And I can go ahead with an overall bullish scenario as long as we're holding the $1.27 level. You know? So that's still what I'm watching here, $1.27 and up against $1.27. That's why I'm saying that. Cannot rule out that we go up directly. I have to show the potential. I can't clearly favor that until I see a breakout. Okay, that's just very, very simple, very clear. It's all about the levels. While the market structure is a bit ambiguous because the market itself doesn't know what it wants to do, the levels are pretty clear and we have very, very clear parameters to watch here on this chart. Bigger picture, if we zoom out a little bit and go to the one-day chart, you can see that in the white scenario, I'm expecting one more high in wave 3 here of an ending diagonal in wave C. And then we should see another wave 4 and another wave 5. This year is unrealistic that we get to, let's say, 119. Even 37 would be a stretch. I'm looking at maybe 19. And then we can take it from there. I mean, if we go there and there's, you know, the indicators suggest that we should see further upside, then we can follow that. But for now, I see this as a consolidation in an overall uptrend, which still has a few more upside squiggles to do. that's my update about FETCH.AI. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.